Be Wealthy and Smart, episode 1060.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about Housing Affordability Index drops to the lowest level since 2006. This is a Wall Street Journal article that I really wanted to share with you because it says mortgage rates and home prices are up sharply, pressuring buyers and driving sellers to cut prices. So we've been transitioning into a new phase in the housing market with higher interest rates, a little bit more supply coming onto the market, fewer instances of multiple offers in some markets. So I wanted to share with you the latest up-to-the-minute information about housing affordability. Basically, what happened in May was it became the most expensive month since 2006 to buy a home, which prompted more buyers to give up and pressured sellers to cut their asking prices. So we finally have seen some movement in prices on the downside in some markets, and that's good news because we need to have more inventory and a little bit more flexibility with pricing. The National Association of Realtors Housing Affordability Index fell to 102.5 in May, the lowest level since the index fell to 100.5 in July 2006. It was close to the lowest level since July 1990, when the index stood at 100.2. The Affordability Index incorporates median existing home prices, median family incomes, and average mortgage rates. The article says home buying was relatively affordable in 2020 and last year thanks to record low mortgage rates. Even a strong demand sent home prices skyrocketing. But this year, mortgage rates have moved up sharply and house prices have climbed to new highs nationwide. Mark Fleming, chief economist at First American Financial, said, "I don't know that we'll ever see affordability again like we saw in the last year or two." And of course, he's saying that because it's all based on the price of money, and what's going on with interest rates and the Fed raising rates has impacted mortgage rates dramatically. The typical monthly mortgage payment rose to $1,842 in May, up from $1,297 in January and $1,220 in May 2021, assuming a 30-year fixed-rate mortgage and a 20% down payment, according to the National Association of Realtors. Mortgage rates have declined in the last 2 weeks, but according to Lawrence Yun, National Association of Realtors chief economist, affordability is likely to get worse in the coming months because home price growth is expected to exceed income growth. It goes on to say the housing market has cooled significantly in recent weeks as buyers have stepped back from the market. Sales of previously owned homes slid in May for the fourth straight month. Some buyers can no longer qualify for mortgages, while others are unwilling to pay hundreds of dollars more a month compared with what they budgeted just a few months ago. The sudden drop in demand is expected to lead to slower home price growth by the end of the year, and some economists are forecasting price declines. Robert Dietz, chief economist at the National Association of Home Builders, says we're in a housing affordability crisis right now. Boy, isn't that the truth? With interest rates going up so much so quickly, it really has knocked a lot of people out of an affordability range that they thought they could afford on a home. For example, Dalton and Lacey Lyons saw the market slow down firsthand as they shopped for a home near Denver. They started house hunting in April and made 5 offers over list price, but lost out to other bidders. By the time they found a 3-bedroom home with an unfinished basement in Castle Rock, Colorado in June, the market competition had cooled off. The seller accepted their offer at $555,000 asking price and agreed to pay $2,500 toward their closing costs. But a less competitive market didn't mean a cheaper one. The Lyonses had to reduce their budget as mortgage rates climbed. "We're very excited," Mr. Lyons said, "but what's really disheartening is if we would have been shopping 6 months ago, the way rates were, we would have been looking at more like a $700,000 home." The average rate on a 30-year fixed-rate mortgage was 5.3% this week. That was down sharply from 5.7% the previous week, but up from 2.9% a year ago. Jason Roberts started shopping for his first home in Sacramento, California earlier this year and was quoted a 3.75% mortgage rate. He made offers on 2 homes before deciding to walk away from the home search in April as mortgage rates climbed close to 6%. He said, "Now you have high prices and high rates. I would like to buy, but the market is just prohibitively expensive." So this is what we're seeing, and even though rates have come down a little bit the last couple of weeks, they're still a lot higher than they were, and that's making homes very unaffordable for a lot of people. Now, the bond market is pricing in the possibility of the Fed taking a pause later this year. And if that happens, there may be a window where there's actually a decline in interest rates, and you might be able to jump in and make an offer with lower rates. So you want to really stay on top of everything that's happening in the mortgage market, watch the interest rates there, and maybe it'll work out that you can coordinate an offer with low interest rates that just happen for a short period of time. We might have a window here where that's a possibility in the next, let's say, 90 days or so. I will post a link to this in the show notes in case you want to read the full article. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.